Welcome everyone to our fireside chat with Professor Eswar Prasad. And my name is Ugur Koyluoglu. It is all about the future of the financial system that we'll be discussing. Most of you in the audience have read the professor's book on future of money. Nevertheless, it will be great to hear from him an introduction, as well as his authentic story about what made him focus on future of money. Professor?
Thank you, Ugur. So when I started thinking about digital currencies, it was clear that some major changes were afoot. So the book was my way of trying to put my thoughts together in terms of how we've started with the fintech revolution, how that fed into the cryptocurrency revolution, which might in fact end up catalyzing specific forms of digital money provided by central banks or other government authorities, and what all of this might mean for financial markets and institutions, for central banks in terms of the transmission and implementation of monetary policy, and ultimately for the international monetary system, which is why it ended up being a 500-page book.
So, Eswar, if I may, based on your research and travels and imagination, what kind of future do you envision in financial services?
Now, clearly the future of finance and the future of money is going to be digital. But going beyond that, it's a question of what form will this take? What form will money take? Who is going to be providing that money? What sort of services will different types of money provide? So one way of thinking about the changes that are likely to ensue is that we might have a bifurcation of the different roles of money. So right now, if we think about money, the traditional functions as a unit of account, as a store of value, as a medium of exchange are all rolled into one type of currency, typically that issued by central banks. Now, one can well envision a future where in fact you have other forms of digital money provided by private providers, digital currencies such as decentralized cryptocurrencies, perhaps stable coins that coexist with official currencies as mediums of exchange. But my long-held view is that ultimately you need institutionalized trust. So if you think about how stable coins operate, yes, they are cryptocurrencies, but ultimately they get their stable value by relying on institutionalized trust because they do have backing of fiat currencies. So I think in terms of the store of value function, it's going to largely reside with fiat currencies. But there is an interesting analogy here if we think about the international monetary system. I spoke about how you might have a bifurcation of the medium of exchange and store of value functions. There are changes coming on the international front as well. Now, one of the very important changes which I think is going to make a big difference in terms of international payments, of course, is that we are getting already very significant efficiency gains, reductions in costs, quicker processing and tracking abilities as we think about international or cross-border payments. Many countries are setting up their own payment systems. China has the cross-border interbank payment system, which can directly communicate with the payment systems of other countries. Emerging markets are getting more developed financial markets, so you can well imagine a world in which you can more directly transact between pairs of currencies, including between pairs of emerging market currencies, without needing a vehicle or intermediating currency such as the US dollar. So it's possible that you have a change in terms of the medium of exchange function with a variety of currencies beginning to play that role. But as a reserve currency, as a store of value, I think the digitization is really not going to have that much of an impact. I think we are still going to have the US dollar remain largely dominant, although practically every rival of the US and even every ally of the US would like a change from that system, but I think it's not going to happen.
So we have over 90 countries experimenting, piloting, or even using central bank digital currencies. And you really emphasize institutional trust. But this really comes with a number of challenges and risks. I remember your opinion piece at the Financial Times, specifically focusing on the challenges and risks. Can you please elaborate on that?
So retail central bank digital currencies, digital versions of the currency we love and some of which is still used. I've been trying to get by right now in Singapore, and it's very difficult actually to get by without cash when I try to pay for certain things because my US credit card doesn't work quite as well as I would imagine it would. So retail CBDCs, as the IMF Managing Director mentioned, I think have many advantages. They can broaden financial inclusion, they can increase the resiliency of payment systems, and almost inevitably they're going to happen so long as central banks want to have their money play any role at all in retail transactions. But Ugur, recently I've started getting a little more concerned about retail CBDCs. I was much more positive about them a couple of years ago, but as I go to countries like China and India, where CBDC experiments are very far advanced, the reality is that there is no strong user case for a CBDC in those countries because the existing payment systems are working very well. In China, you have Alipay and WeChat Pay. In India, you have the unified payments interface. So the question is, who needs a digital yuan or a digital rupee? And central banks recognizing this are trying to build a value proposition essentially by using the programmable features of digital money, which at some level are very attractive from an economic policy point of view. So you could have units of central bank money with expiry dates if you want to stimulate consumption. You could potentially even argue that certain units of central bank digital currency can be used for certain types of purchases, maybe durable goods, and maybe not for certain other types of purchases. Now, this is all very attractive. You could even have negative nominal interest rates, which again sounds like an aberration, but in very desperate economic times of the sort that we had right after the global financial crisis, one could well imagine a central bank wanting to have negative nominal interest rates because that can stimulate consumption and investment. This all sounds very good, but I have a real concern that if you think about a world where you have different units of central bank money with different properties, that really affects the integrity of central bank money. Right now, if you have a dollar bill or a digital equivalent of a dollar bill, you know exactly what that means, what it is going to mean in terms of value. But if you have certain units of central bank money with expiry dates, some that do not, that could cause questions about what is exactly a unit of central bank money. So I think that is a real concern, especially as you think about the durability of stores of value. And then if you start thinking about central banks becoming the arbiters of social norms, like can you use central bank digital currency for certain types of things, but maybe not for purchasing illicit drugs or ammunition or pornography or something of the sort, you get into very dangerous territory where the central banks start being seen as instruments of the government in terms of surveillance, in terms of economic policies, but perhaps even in terms of social policies. I'm not saying that all of this will happen, but I think it's very important for us to recognize that while technology, even in the context of central bank money, might lead us to a much more efficient future, we've also seen technology lead us into very dark places. So I think we really need to have a discussion, not just as economists or technocrats, but at the level of society, to think about whether we really want digital central bank currencies and what form it should take, what guardrails we should have in its implementation.
So let's stay with the digital money. You already mentioned central bank digital currencies and stable coins. Let's add deposit tokens to that group as well. As far as I understood, you are saying that they could coexist, but they will be competing with each other. Am I right in my understanding?
That's correct, Ugur, and it's a very interesting issue about if we're going to have different mediums of exchange, which ones are going to dominate. And one can well imagine a world in which you have all three coexisting. Now, there have already been debates here about how tokenized deposits versus stable coins might compete, but one can also imagine retail central bank digital currencies also operating. Now, my view is that certainly as an economist, I welcome competition, because if you have competition among currencies, that should, at least in principle, cause the issuers of those currencies to make sure that they maintain the value of those currencies. But one can imagine a world in which tokenized versions of bank deposits play a very useful complementary role in payments, But then you have retail central bank digital currencies that are ensuring payment system resilience, but also serving to broaden financial inclusion, while stable coins, because of their programmability and functionality, could, as they are doing right now, play a very important role in decentralized blockchain-based finance. Now, certainly, there will be some overlap between these functions, and as I just mentioned, retail central bank digital currencies might have some of these features as well. But I think we might well end up with a world where all three coexist and start specializing even in the specific forms of mediums of exchange in which they start playing roles.
Very interesting. There are several folks in the audience quite interested in cryptocurrencies in parallel. 15 years into Bitcoin, we learned a lot over time. If Bitcoin is the answer, what is the question?
So I think the question is, what are the inefficiencies in the financial system? So when I think about Bitcoin, you know, the pseudonymous creator of Satoshi Nakamoto. Now, you know, having written my book on the future of money, I go to a lot of cryptocurrencies, and so far I've sat on stage with 3 people who claim to be the real Satoshi Nakamoto. Who knows who the actual person is? But the technology is remarkable, the notion of actually being able to conduct transactions in a decentralized way using just digital identities. Now, what Bitcoin has become, which is in my view a largely speculative financial asset rather than a medium of exchange where it is not working too well, is sort of ironic. But I think the real legacy of the cryptocurrency revolution, in addition to the blockchain technology, is that it has shown us what the inefficiencies in the traditional financial system are. There are many rents, you know, collected by banks that basically exploit and profit off these inefficiencies. And one of the prime examples, of course, is the inefficiency, high cost, low processing volume, high processing time of international payments. Now, it is very odd that given where we are with technologies, that international payments still take so much time, are so expensive to execute. And what I think we've really seen as a consequence of the cryptocurrency revolution is a recognition that there are these enormous inefficiencies in finance and in payments that can be resolved through technology. In addition, of course, cryptocurrencies, including stable coins, including now the doomed Libra/Diem project, have also catalyzed central banks into starting to think about retail central bank digital currencies. So I think the real legacy, in addition to the blockchain technology, is going to be as a catalyst for a lot of things that are going to improve financial systems. But of course, I should mention one irony, Ugur, which is that we were supposed to move towards a world of decentralized finance where there would be much easier and broader access for a number of financial services, payments, and providers. But in fact, we are seeing a lot of centralization in this space. So if you think about a stable coin, it's not decentralized in any fashion. If you think about the governance structure, the trust mechanism, the validation mechanism, all of that is centralized. So the need for centralization, the need for trusted institutions still seem to be very important to all of us as human beings, even though our libertarian notions do lead us towards decentralization. So I'm hoping again that we will have more effective and efficient traditional financial systems coexisting with decentralized finance, which I think still holds a lot of promise.
So we do have money, and we have different forms of digital money coming to our lives. But how are we going to create societal value through perhaps tokenization of real-world assets or through smart contracts? Can you please elaborate on, where are we going to see the societal impact and value?
So at some level, even very basic technologies like mobile phone-based payment systems are transforming lives in many low-income countries and, of course, in many middle-income countries where digital payments have become pervasive. So I think we need to think about the whole gamut of technologies. But certainly the notion of tokenization of a variety of financial assets, but even real-world assets, holds a lot of promise in terms of much more efficient financial intermediation. And I think that is the reality we're going to move towards. And certainly blockchain-based solutions are going to lead us to a better place. Now, it's also worth thinking about whether once we identify problems, whether blockchain is really the answer. It's not always the right answer. If you think about retail CBDCs, Certainly, blockchain-based technologies have catalyzed changes, but you can think about even simpler versions of distributed ledger technology or even other basic technologies that can deliver a lot of what is needed in terms of improving the efficiency of financial system. But tokenization, I think, really has the potential to transform even basic elements of public record keeping, of financial intermediations, and intermediation of real-world assets. I should make one point, though. I think the notion of conducting transactions through smart contracts certainly makes sense, and it's going to be a lot more efficient if we think about financial assets that can be easily digitized. But once we move into a world where we think about tokenizing real-world physical assets, then we still need an institutional mechanism that can maintain the rule of law, that can manage contractual and other types of property disputes. Because while smart contracts are very good when they work well, there are many states of the world that are very difficult to pre-program into a smart contract. That is where things might become a lot more complicated. So I don't think we're going to lose the need for institutional structures to support decentralized finance. And of course, that institutional structure includes robust regulatory frameworks on the financial side, but as I mentioned, also institutions that can maintain the rule of law and a broad set of legal rights.
So how far are we compared to the picture that you kind of described to us in terms of perhaps years in a range? And what are the essential advancements that we need to go through to get there?
So the fact that money is going to be digital is the reality already in many countries, of course. And I think there are a few laggards, including the United States, where I think change is now coming relatively quickly. But in terms of moving towards more decentralized finance, I think there really needs to be a change in terms of the regulatory architectures, because right now there is still this tug of war between regulators on the one hand and unscrupulous operators who are essentially have taken decentralized finance in, I think, a very unproductive direction through a great degree of decentralization. So it's become really an area where financial fraudsters operate. But I think, again, there is a lot of potential, and I think that can be realized in a few years. Now, what I think is far more interesting is in terms of international payments, which is very important for reducing frictions in terms of global trade, in terms of global finance. If you think about international migrants, economic migrants, sending remittances back to their home countries, there I think the future is very close, but not quite there yet, because there are many central banks, including the Monetary Authority of Singapore, that are using wholesale central bank digital currencies to increase the efficiency of cross-border payments. But I think that in the next 3 to 5 years, we're going to see very fundamental changes. And going back to one of the questions you had asked me about earlier, Ugur, about the international monetary system, that is where I think there are going to be some very interesting changes as well that are coming up in the next 3 to 5 years. But I think the notion of us really shifting away from a dollar-based financial system, that is going to take a long time if it ever happens.
So as an academic, obviously you are conducting research with your students at the bleeding edge. These are unpublished work, but do you have like any insights, anything interesting there that might lead to a book or something that you can share with the audience before we close?
Well, I should probably talk to my wife before I commit to this broad audience about a particular book, because, a book takes a lot out of you. But I think there are very interesting research areas that are worth thinking about. So some of my own research right now is to think about some of the areas where blockchain-based finance still has certain deficiencies. If you think about blockchains, they are very well-run, self-contained ecosystems. But for one blockchain to communicate with other or to communicate with the real world in terms of getting financial asset prices or other types of information, you still need oracles, which are pieces of software where there are lots of vulnerabilities. So I think on the technical side, on the analytical side, there is a lot of work to be done. And one of the really interesting issues is what is going to happen to the structure of finance in the middle of all of these changes. As I mentioned earlier, one of the paradoxes is that existing or traditional financial institutions are co-opting the new technologies to increase their ability to conduct these transactions well, which is a good thing, but it means that we don't have the sort of decentralization that might lead to more competition. So I think there are lots of very interesting changes coming. But as for the book, we'll have to wait.
Thank you so much for starting this afternoon in this hall where we are going to have a number of sessions focused on future of financial system and future of money. Thank you.